Congratulations.
Hey, my king, how are you?
I'm tired. I'm tired. I'm tired. I'm tired. How are you?
No, I'm okay, my friend. I'm
Yeah, I
okay.
am tired. I am tired.
Yeah, what's up? You
Yes,
slept
yes,
late?
yes. No, no, no. I had a very, very busy day. I had a very early morning and a very busy day. So at around
Oh,
4:30, I took a nap, thinking I had set an
hey,
alarm. And when I wake up, it's
okay.
like after 6, and I'm like, Jesus, Jesus.
Yeah, yeah,
But yeah, yeah, yeah,
yeah.
yeah, yeah. We here, and we
Okay.
we need to get the ball rolling.
Yeah, yeah.
So, so the last time we did yield curve control, sorry, yield curves as well as bonds and yields. Do you have questions?
No, not just yet. I do have question on a different matter though.
Okay, which is?
I don't know if you will want you'll take it now or later. No, I was just checking this USD JPY and I saw it
Yes.
dropped
Yeah.
quite a bit. So
Yeah.
what happened? Intervention.
No, it's not. It's not intervention.
Oh,
It's because one of the reasons. Let me actually open up. Let me
it did
share.
150 then?
Yeah, it did 151.
151. Okay.
Yeah, yeah, it pushed over. It pushed beyond 150. So
Okay.
can you see Chrome now?
Yeah, I can see Chrome.
Okay, here's one of the reasons why. It's because of a dovish message from one of the central of one from one of the Fed members, because the Fed
Oh,
they are going into a blackout period. Essentially, a blackout period is a period before, it's like a week before the central bank comes out with an interest rate decision. So a blackout period means that central bank no longer holds any interviews or any meetings, because
yeah.
maybe it's viewed as that they might end up giving clues on the decision that they will make, right, when it comes to the actual
Okay.
interest rate decision meeting. So today was the last day for for uh for the Fed, because they're having their meeting in the beginning of November. So what
Okay.
happened? Okay, this is one of the, I did not see this one. Japan's Kanda, we would not comment on intervention if we had done it. So yeah, so which means they probably also intervened, yeah. Which
Oh,
means there was probably an intervention as well. But one of the reason that actually sent the dollar lower, it was okay, if it can just load quickly. It was this, like I said, one of the members. So in any case, I don't think there's much debate that this was intervention, or at the very least, it will be seen as intervention. Update. Okay, so nothing much there. But here's this article, because it's two people. One person is a reporter, a Wall Street Journal, and then the other one
okay.
is like I said, a Fed member. So here's this,
Okay.
yeah. So here's this article. Because the intervention, I can't comment a lot about intervention. Can basho last time would they have intervened? So
Oh,
so yeah, Utima Ross is this guy that I'm saying, we're Wall Street Journal, and then Udali is a Fed member.
okay.
So the Tima Rose article earlier might have been a leak, or maybe not. The Fed clearly leaks to him, but the text of the article wasn't as aggressive as the article. But Dali removed any doubt. She arrived on the wires with unscheduled comments and a clear dovish message. Tomorrow is the flat blackout, and this is clearly a coordinated message to push back against the market pricing in too much tightening. That's filtering through to the market more dramatically now, with the dollar sinking, yields falling, and the S&P 500 up 1.5%. The terminal Fed funds rate top is back to 4.85% from 5.03% yesterday. Dali spelled it out, saying 4.5 to 5% should be seen as the top, and that the September is still valid. So essentially, she was pushing back against further tightening of Fed, right? Or ebuka ngokuthi Fed should no longer be as aggressive with hiking interest rates because they might risk inakuzan a possibility of overshooting or tightening too much.
Okay.
Yeah, so
okay.
so it's just a market reaction to that. But other than that, there's no news. Maybe it's an intervention from Bank of Japan or nah. Because the article, yeah, okay. The actual headline for
but isn't it they also released the CPI figures, I think yesterday or day before yesterday, Japan.
Yeah, they did. It was today, but then that they still maintaining the same position.
Oh, so the fundamentals have not changed basically.
No. The fundamentals yes, on a central bank standpoint, the fundamentals Nancy Nakuzan headline. So this market is viewing as something dovish. So Fed Dali, we can easily find ourselves over tightening.
Oh.
Yeah, but so is she to a certain extent she's pushing back against the market tightening of inakuzana interest rates for the dollar. So njengoba ngisho ukuthi that coupled with the fact ukuthi iFed is going into a blackout and ngeke kusezwakala lutho until kuze kube usuku le meeting from any of the Fed officials, whether it's an interview or them just giving comments, ngeke kusenzeka lokho. So into imarket ezo ngasho kanjani, this is what the market needs to now absorb, digest until kuze kube meeting ukuthi mekufika meeting babanjana, is the Fed going to continue being aggressive, or maybe is now the Fed going to push back? Because already the expectations are for a 0.75% hike. So now maybe they might hike by 0.5%.
Okay.
Yes, because it's just a reaction. It's a reaction from the market. Okay, come ngaphi lo osezoshinto kanje esikhaleni. Because bonke basho ukuthi hayi siyanyusa ama-interest rates, silwisana ne-inflation, and i-fight against inflation is still far from being over. And then lo sezoqhamuka nje ekugcineni ngosuku lokugcina sezothi we should not find ourselves over tightening. Ukuthathelaphi yena? Yabo, so that's the reaction kahle from imarket ukuthi ukuthathelaphi yena. And then ke njengoba ngisho ukuthi nalo munye who is the actual Wall Street Journal reporter, naye bekhuluma ngento efanayo ukuthi mezwa ngathi kunongahamselani when it comes to ama Fed officials in terms of ukuthi kumele sinyuse aggressively noma sinyuse kanjani in the December meeting, actually not the November meeting, but in the December meeting. So sekubonakala ngathi iFed ayisahlangene as before. Sekhona abanye asebethe ngathi we tightening too much right now, or we tightening too aggressively, but abanye bathi no, let's push on, let's continue forward. And then mase come Fed officially sizoshinto kanjena futhi, now it's raising more questions. Yabo.
Okay. All right.
So essentially that is what is happening.
All right.
That's the article ka Tima Rose. So I just want to read the first line. So Federal Reserve officials are barreling towards another interest rate rise of 0.75 percentage points, and whether to signal a smaller hike in December. He highlights a divide in the Fed, with some wanting to slow the pace of hikes and others worried that inflation isn't falling. So manje kunaleyo divide le. So imakethe into vele ngeke izithathe as being positive. So it's a reaction, and it's an unfortunate reaction yokuthi akekho ozophuma eyikhulumele futhi mhlawumbe umunye weFed who's a hawk mhlawumbe uzothi hayi no, samele siqhubeke silwisane ne-inflation. Njengoba ngisho ukuthi i-statement sokugcina imakethe kumele isebenze ngasi lesi esidovish sikadala. Yabo.
Okay.
So yeah, so that is why we're having this sell the dollar reaction.
Oh, so it was the okay.
So it's not necessarily ukuthi ngoba fundamentally sishintshile or it's now confirmed ukuthi we're selling the dollar. No, but it's just based on ama comments imarket ezogcina ngawo before kuze kufike i-interest rate decision. So imarket is working with that.
Okay. Kusho kahle kule nto i-direction, it's i-direction.
Yeah.
And then during that direction, let's
Sentiment.
say like this pair is going up.
Yeah.
Then the number reaction based on
sentiment. Yes. Sentiment is always short term.
But the full picture is that it's still going up.
Exactly.
Regardless.
Exactly.
Okay.
Like we had in September when the Bank of Japan actually intervened.
Yes.
Remember, it's 145. But because the bigger picture had not changed, yenze njani imarket iyaqhubeka namhlanje iqhokhe 151.
Oh.
So as long as the fundamental picture has not changed, everything else in between is sentiment.
Okay.
Because nalana actually ukuthi Jerome Powell or Fed as a whole have voted would no, we should fear over tightening. No.
Yes.
But it's because Vele imarket is waiting for something that could be a dollar negative because the dollar has been going up. So there's more market participants looking to sell a dollar than buy a dollar at this moment because everyone is feeling that okay, the dollar has been overbought. So at some point it needs to sell off or it needs to pull back or give a pullback. So whenever there's news that are supporting that in terms of a short-term sentiment, then market participants jump onto that.
Okay.
As long as the bigger picture is central bank ingakabi ne-pivot yona ukuthi okay no njengoba ngisho ukuthi if bengaphuma kwi-meeting bebe dovish i-statement sabo noma benganyusa ngo-0.75% but mase bethi sesibona ngathi sesizoqala ukunciphisa manje i-pace yokunyusa, that could be confirmation as well, and then we could see an extended sell-off kwi-dollar.
Okay.
Yes.
Okay.
But for now, it's all just sentiment.
Which is just for a short period.
Yes, as long as sentiment is usually short term, because into yanamhlanje, because next week ingashintsha izinto. But if usekuyiyona i-central bank esithi hayi no sesiyayijika izinto, then that's not short term.
Correct.
So yeah, that is essentially the explanation behind the move. And then njengoba ngisho ukuthi intervention, nothing has been heard. The BOJ has intervened. It's only those two comments from that Wall Street Journal reporter as well as Ulentozana, because he's a credible source. So ingakho nemali reactor kanjena again, and then of course the Fed officially naye phuma izoba worried ukuthi they shouldn't over tighten. I'm actually looking for Ilentozana, yes. You can still see my screen, right?
Yeah, I can still see that Forex Live.
Okay. Yes. Okay. So this was Ilentozana. This was today as well. It's about Bank of Japan increases amount at regular bond buying operation.
How?
Yeah, bo. So they still buying. So even though because in finale inflation or not, Japan August core CPI 0.3% as expected. So inflation is high because even the core inflation is at 3%, headline inflation is at 3%, and the nyanga is 5%. Inflation above target for Japanese yen. But remember, Bank of Japan, they have a ceiling, right? Yeah, if you still remember, a 10-year or a longer term interest rates are capped at 0.25%. So, a 10-year Japanese government bond yield was pushing or was sitting at 0.25% this morning, which is why they bought more bonds. Because remember, if they're buying bonds, what does that mean? The prices of bonds go higher, and your kumbula stays ama bond nama yields pambana. So if they're buying bonds, then bonds should be going higher and the yields should be pushing lower. So they still maintaining low 0.25 cap yakon. So if you can just read this article, but the Bank of Japan boosted its plans to buy bonds in the 5 to 10-year tenure to 650 billion yen, up from 550 billion. The 3 to 5-year tenure is up to 575 billion from 475. The fixed rate bids remain in place as well. This highlights the pressure that bonds are under, but also highlights that the Bank of Japan isn't about to give up on yield curve control. Le 0.25%. Abangafuni ukuthi i-10-year yield idlule ngaphe kwawo. Okuchaza ukuthi they're not looking to hike interest rates. They're still performing a quantitative easing.
Yeah, they're gonna carry on with it.
Exactly. So the fundamental picture has not changed. They may intervene in the short term, and that might cause a bearish sentiment to USD JPY like it did in 145. But as long as you're on the central bank itself in or for them to pivot, then it's difficult.
Yeah.
And now, but we also have their interest rate decision meeting next week. So Nakona market will also be paying attention to that. But Puma, do they still maintain the same position, or maybe do they now pivot or change?
Okay.
Yeah, so essentially, Yoba issues, it highlights that the BOJ isn't about to give up on yield curve control. I see it as a green light to buy USD JPY, but with the pair up 12 days in a row, there are major risks from the Ministry of Finance, usually intervention though. So essentially, which is why USD JPY, for example, has been going up for 12 days in a row. So any negative news for the dollar, Imagete is going to react to that because because there has been buying for 12 days. So the likelihood is that most market participants are now waiting for a pullback, or they're now looking to sell rather than to buy because it has been going up for 12 days. So that the market views as being bearish sentiment-wise for the dollar. That is why we're seeing a huge sell-off reaction. But Nakona, it's still viewed in the bigger picture. We're still viewing it as a correction, but not a change in the trend.
Okay, all right. Trend is still going up. Perfect.
Yes. Njengobubona would like Bank of Japan, but you see amount abathenga bonds. So
yeah,
that means that the quantitative easing is still going on.
Okay.
And we know if quantitative easing is still going on, that should weaken the currency further because it's going to stimulate inflation to push higher. So we should look to continue selling JPY. So did I answer your question?
Yeah, you sort of over answered it in such a way.
Oh, okay.
Yeah, you answered it and then you went above and above and above, and I'm happy with that answer. So yeah, you've proven your point there very effectively.
So at the moment, I'm not shaken in terms of le reversal in the dollar, but because it's always, there's always an explanation for every move. There's always a fundamental reason for every move that is happening. So as long as you can find that fundamental reason, Jenna, then it can put you at ease.
Okay. So now, initially I thought it was something happening on the JPY side, but now it seems as if it was something happening on the US dollar side.
Yeah, market reaction.
How are you able to? Yeah, the reaction like is based on the other currency. I thought it was on the Japan side basically.
Yeah.
How are you able to easily differentiate between the two? Like how or do you just go with those articles? How do you know which one?
I go with the articles, and like I explained, it's either sentiment or it's the macro or macro. I mean the bigger picture fundamentals, right?
Yeah.
So how do I differentiate between a correction and a reversal? It is the change in the fundamentals.
Okay.
If the fundamentals remain, because market, if we're only looking at technicals, it's impulse correction. There's always a correction. We can't just go up in a straight line. So my fundamentals view are the same way, which okay, there will be moments of a correction and that will be driven by a short-term sentiment. But if I can only term it as sentiment if it is not a change in the bigger picture or the fundamental picture. What do I mean? For a Bank of Japan, perfect example, Pamgwet. It's clear, it's evident the fundamental picture is still the same. It has not changed. It's still the same picture from 2021 when I first started buying USD JPY. Bank of Japan, position is a fan and
correct.
So anything that could be positive for a JPY right now, I would view that as sentiment because I understand that the foundation or the bigger picture is still the same. So ngisho ingangena intervene Bank of Japan by selling USD JPY, I would view that okay, it's positive for JPY, but in the short term. Because their position as a central bank has not changed. It's still the same.
They still going to carry on buying bonds.
Exactly. So intervention can just be a momentary pause. We USD JPY rally, but it won't be a reversal in the trend.
Yes. Okay.
So that is how I differentiate. So now look kwe-30 nakhona njengoba ngisho ukuthi kwe-dollar, because everything else for the dollar has been positive this week. Yes, indaba nje iningi, as few as they were for the dollar, they were positive, right? So that also cemented the same narrative yokuthi Fed should continue hiking aggressively. And now all amanye Fed officials ebephuma this week ethi fight against inflation is still far from over. We need to continue hiking. We had a lot of Fed officials that and bonke they kept saying the very same narrative. And if the whole week bonke kade support dollar, we should buy the dollar, and the dollar has been going up the whole week, then dollar is being viewed as being overbought from a technical standpoint. Then ezoba comment ebukeka idovish. And futhi naye akasho ukuthi we should now stop hiking aggressively. Akasho njalo uthi we should akasho kanjalo, but uthi we should be wary not to over tighten. Akasho uthi no, we are over tightening now. As in it's said to we are over tightening, but uthi we should be wary. So kahle market ilento engizama ukusho ukuthi market has been waiting for something that could be a dollar negative, especially now the dollar that is at the high, so that they can sell at the highs.
But now it's not happening now because this was just temporary. This was just for a short.
Exactly. Because it's just a reaction. Because the whole week, bonke got debate hiking, aggressive. We need to be aggressive in the fight against inflation.
Okay, now I see. So basically, there are people who are just waiting for this pair to reach the top so that they can take it from the top and then babuyena.
Yeah.
So now this, when they hear something like this, they maybe sort of like react, thinking that it's a message. This thing is now reversing.
Yeah. No matter they think it's a reaction. But then at the same time, it's a short term. But nakona, it being a short term, if it can't be something that is continually pushed, then it could result in a change in the trend. If at some point, there's always people trying to pick the top. And especially if Imagete has been overextended because it has been going up for 12 days. So when they see an opportunity, because if something has been going up for 12 days, majority are no longer looking to buy because they feel as if I'll be buying at an expensive price. I need to sell, or we need a pullback.
Yeah. Yes.
Yeah,
basically, the reason for my question or my statement was based on the fact that I still remember this week that a lot of them were speaking about the level of 150. So it looks like it was being viewed as the level whereby now, correct. It's gonna reverse. And then if it goes above that level, it sort of like maybe gives them more confidence that it's still going up.
Yeah,
I don't know.
Yeah. No, because it gave that, because everyone was expecting that the Bank of Japan will intervene at 150.
At one.
But then it went up to 150, 151. I think it almost hit 152.
Okay.
Excuse me, it almost hit 152.
Oh.
So at that point, there are people who are just waiting to just just any news that could be a negative for $8 or that could be perceived as being negative for $8. They will jump onto that.
Yeah. Huh. Okay. Wow.
So that is pretty much the story. But it hasn't changed. Nothing has really changed in terms of the fundamental picture. It's not like euro has now all of a sudden became stronger than $8 or a pound became stronger than $8. No, it's just sentiment. And lapho kusiza khona ku understand that the fundamental, that I like to I use fundamental because but it's the macro picture. The macro picture, which is the bigger picture, understanding the bigger picture and the short-term fundamentals or sentiment.
Okay.
Because njoba ngisho ukuthi impulse correction, that's how the market flows, man.
Yeah. No, you know what? The one thing I love also is that you keep touching sentiment, and then now I'm starting to understand that this word is sort of like broad actually, because I've only been using it in one or seeing it in but it's quite, it's sort of like it means a whole lot of different things in a way, because
it's pretty much sentiment at the moment. Njengoba sibona njena now USD JPY it hit a high of 151.94.
Yeah. Wow.
151.94, and they were expecting around 150 for a sell-off.
Okay.
So if even if we move and in the bigger picture, if you're looking from a technical, it's just a pullback.
Yeah.
And then if you're using fundamentals to support it as well, I support the very same narrative. Because it could put me inflation next saying 83% core as well as headline. Kuphume futhi at the same time a statement from the Bank of Japan ukuthi bayaqhubeka bathenga banyusa i-amount abathenga ngayo ama-bonds. So there's nothing bullish about the Japanese yen based on those. If you book inflation yodwa, that's bullish because it's above the target now for 5 months. But then if after that kuphuma bona futhi bezothenga ama-bonds, kuchaza ukuthi no, they still want to see inflation go higher. Yeah, well, they're not happy because 3%, it's not a level they see. I actually shared a little article. I think it was on.
I think it was on ING or something like that.
It was on Forex Live. Yeah, we're one of the members. The different points, which inflation abayiboni is sustainably above target. In as much as it's above, but abayiboni in it being there in a sustainable manner, now they can start hiking my interest rates. If they can pivot, inflation, and bona kumbula, they've been in deflation since around 2014, experiencing very low inflation. So if you have been in great deflation for a very long time, and then only now inflation is pushing higher above its target, then it's something else. And truly, based on their metrics, they're still not convinced which inflation is sustainably above 2%.
Okay.
So zonke lezo zinto njena they're just fueling a dollar buy over a Japanese yen.
Yeah.
So people are not inflation. Because I'm sure they made a statement, okay, the core consumer price index in Japan, which excludes fresh food but includes fuel costs, jumped 3% in September from a year ago, accelerating from 2% in August to the fastest pace in 8 years as business continue to pass on rising costs or rising import costs driven by higher commodity prices and a weakening yen. The core inflation print also exceeded the central bank's 2% target for the sixth straight month, presenting a challenge to the Bank of Japan, which is increasingly pressured to adjust its policy of ultra-low interest rates. Analysts suggested that elevated fuel and food prices caused by global disruptions and a weakening yen that inflates import costs are expected to keep Japan's inflation above the central bank's target for most of this year. Meanwhile, the BOJ is widely expected to maintain ultra-low interest rates for a considerable period despite inflationary and currency pressures as it aims to support a fragile economic recovery. So yeah, bona njena basamile entweni yabo ukuthi
Okay. Wow. Okay. No, thank you for that, my king. I hear you now, understand it now. The fundamentals are still the same.
Yeah, the fundamentals are still the same. Nothing has changed fundamentally. And we needed a pullback. If we've been going, because the daily time frame, we've been going up so less cut. So a pullback was due at some point. And then we had a catalyst based on these news that the market perceived as being dovish.
Yeah.
So that was just a catalyst, but there's no shift in policy, no shift in the trend, no shift overall.
Okay.
Yeah.
All right. Now I got it.
Okay, so it answered your question.
Yeah.
Okay.
You answered my question.
Okay, probably there was also intervention.
Because now when are they gonna write about it?
I'm looking at AUD JPY. I'm looking at the spike.
Okay.
Currently, because in Daba they were negative for $8. But if no AUD JPY spike to the downside, kushuthi JPY there was an intervention from a BOJ.
Okay.
Yes. To stem Japanese weakness of Japanese yen. I think NZD JPY. If Boko JPY, yeah.
So are you saying that 150 was like the Japanese yen was? I mean, Japanese central bank government was also watching that level or something.
No,
like
they had been, but not to 150 because is a fair one close to 152. But they had been saying if they are keeping a close eye on markets and they will not allow any excessive one-sided moves on the Japanese yen or against the Japanese yen. Yeah, but they actually intervened because even though NZD JPY it spiked up and then it bore a 4 hour candle. So they intervened. The Japanese yen intervened in addition to that to a negative reaction to Ilentozan, to that comment from the Fed official.
Okay.
Yeah. The NZD JPY, there's no.
But now wouldn't that be on the news now? Why is it not on the news now? Because that is what I was looking for.
I need to bonelu tibaten. If I go back to Forex Live, bateni utelo yana essentially like there's no need for us to comment.
Yes. Will that be viewed as an intervention?
Ayithi yabona lo munye weFed uqhamuka uthini yena. nang naye uqeda ukukhuluma kusho ukuthi unama comments awenzayo. Fat Bullard yena vele uyihawk yena. Uthini? Uthi I want rates that put significant downward pressure on inflation. Ngathi yabo yena uphuma uzosho into ephambene nekade ishiwo udala. So kusho ukuthi into le exactly into eshiwo udali yena ngesindlela ezibiza ngayo ngesizulu udali. Lento eshiwo udali yena kushuthi it was just a trigger in addition to intervention. Yabo, because nakho la Japan's Kanda, we would not comment on intervention if we had done it. Right? Yes. We would not. So now comment. You must read between the lines. Bayenzile, because we would not comment on intervention if we had done it. And they haven't commented. They have done it. Right? If we're commenting on intervention, we haven't done it. But if we have done it, we won't comment on it. And they are not commenting on it because breaking news Japan confirms what they have intervened. They have intervened. Statement we would not comment on intervention if we had done it. And they are not commenting because namhlanje akaze besho lutho, because if ufunda wonke ama articles namhlanje kuseni abelocation nje ukuthi silindi ukuthi be comment ngoba nanku uJP1 uyagijima uyako 152 silinde ukuthi and the whole week they had been talking about the intervention, which they are not happy with one-sided moves, this and that. Namhlanje bathula du namhlanje, then sekuzophuma i-comment ekanje kade be-commenta the whole week. So it's pretty obvious. And now if you're looking at onke ama-JPY pairs, ubuka ukuthi they had a bearish reaction, they spiked higher and they closed bearish. There was an intervention on the JPY side.
Because there was nothing on the New Zealand news. And there was
nothing bearish for New Zealand.
I hear you. Okay, all right. Now I hear you now.
Nothing bearish for New Zealand. Nothing bearish for Australia. For AUD, AUD JPY spike ezansi. Let us look at JPY as well to just confirm.
Because if you want to interview that pair in normal.
Yes, let's have one look at JPY. Spike lower, which means they intervened.
Okay, right. Now I hear you. Sorry, I was a bit lost in the beginning when you were trying to prove the intervention, but now I hear you now. Because you're going through all the pairs with JPY
exactly
to prove that there's the same sort of reaction.
Exactly. It wasn't only because of a dollar. USD JPY. So that is why we sell off because there was intervention. But nakona, same thing. It's just a temporary measure until is a exchange on position Bank of Japan, of which I don't think, of which siyazi ukuthi ayishintshe because sibonile ukuthi kwanamhlanje kuseni bebenyusa amount abathenga ngayo ama bonds. So it might just be something because this was the time they intervened ngomhla about 22 September. So that was when they intervened. So it might just be a similar thing where it's just a pullback and then the market continues pushing higher.
Wow. Sure. Hey, this pair has been so eye-opening for me, No, because I'm also looking at this Bloomberg article where they even show 22 September, Japan intervened to support the yen.
Yes.
So, yeah.
I'm a fundamentals now.